Alrighty, alrighty. How many more seconds we got? 30 seconds. So essentially, what we're looking for here is a big drop after this 30-minute candle holds below the 9 EMA. Maybe not big drop, but it should continue its downward direction after this candle holds and closes in this direction. Potential pop back up, maybe back up to that same level to fight it again, but ideally you want to see it continue straight down. And I'm gonna switch this to a double chart so we can kind of cross reference it with a smaller time frame. Now this of course would work better with more volume, but the premise is still the same. Still looking for buyers to lose interest once it holds this level right here. How much volume is this? 3,000, 2,000. It's enough. We gotta break the low of this candle for confirmation though. Low of this candle's 262. We need to break below 262. If it holds 262, you got a high chance for this 30-minute candle to come back up and try to retest this EMA right here. Get VAF back up at $2. Oh wait, what was he trading? He was trading. Wait, what was he trading? Oh, click. Look at that shit. Click fucking hell. Can't say I didn't see that coming. We got the line there, boys. Which is essentially this shit right here. And this shit right here. Bad day on click. Click is flipping bullish on all time frames. Except that one. We don't look at that one. We really need to see this break below. This would have broke below 460. You could have dropped down to this. It would have broke this level on the hourly. Could have dropped over here. Would have broke this level on the 30. close to 4, the 15, which is holding a 9. It would have broke that level on there too. Now you're just probably looking for a pump here because they're trying to retest these highs. What's this, 88? Let me get back to AFF. See what's going on. There we go. Here we go. I should have stayed on this screen. Alright, so we're getting candle opens. Need closes below that level. This is already below the level. We push down some more. Now it could stop right here because they like to pull to the next level of support. Which this, by the time it gets there, that 20 EMA is going to line right up with this 254 level right here. So this is going to climb and line up right with that. So you got a high chance of that going down, hitting that level and staying, and either going back up or just going sideways. Depending on the price action too, when it comes into it. And we got this bad boy right here. All these are lining up. This 4 hours, okay, 4 hour chart. Look at that. Bottom of that 4 hour chart. Bottom of that wick is 251. So you got 251 here, which that EMA is actually at 250. Where the fuck is it? It's right there. It's not 196. Is it possible? Oh, that's the Bollinger Band. That's irrelevant. But this one, I want to see how this reacts. Anytime you get a reaction on any level, that means that the people who are watching this stock and trading it are respecting that level to some degree. So you want to hunt for any time it respected a level. And then you go back and you look and say, okay, respected it last time. The next time it comes up on it, is it going to respect it again? Because they've been respecting it the whole time. And you want to hunt these charts and look for clean levels. So I think on this one, 30-minute with the cleanest. On the initial price up, even starting all the way back here, initial price, you had break above, crash down, break above, crash down. Then you came here, 2 wicks touched this level. And it came down, you hit the 9 EMA. You see it touches it to a T, hit that level, respected that level, broke above, came back down, closed above it, next candle, wanted to push above. Now we above the VWAP. We start to respect the VWAP now, and we go away from the 9 EMA, but it's still respecting the next level up the same way as it drops down. It starts to progressively more and more respect the next level that it's dropping down to. So when you came here, and in real time, this looks different because these bottom of these wicks are touching these candles more closely. Like this one right here, lifted up because we had so much volume right here. That this pulled this VWAP up to a high degree, but at the time this VWAP was a lot more closer to the bottom of this candle before all this volume came in on a 30-minute chart. So now you got the respectation of the level is popped, it's broke. Then you look at the 30-minute chart, come back down, respected that level, respected the level. This one came down, broke below, came back above, respected the level, respected the level. Now once these two broke, so once you get a break below this level is no longer in play until it goes up above it and holds again. The next level is going to be the level right below it that is going to look to pull to and bounce off, which would be this one right here. So it came down, pulled down to this 9 EMA. Now this 9 EMA became the new support level. Until this new level breaks, this will be the line in the sand for the longs looking to take a position. Ideally, that's what you would assume they would do. So all throughout this phase right here, you had all these points where it came down, respected that level, respected that level. It even up until this point, like after hours, VWAP kind of goes away until it starts to set like a precedence. But you can see even here, it came up, broke back straight through VWAP, didn't even care about it, and it went back down. What did it touch? Touched that 9 EMA right there to a T. Same thing with this one, touch it to a T. Now if you come over here and you see, okay, it broke above, now it's respecting the next level up. If we come here, get the 30-minute chart, if I was to go to the 15-minute chart, I'm pretty sure this candle would show some support and some slowdown at that VWAP level because it's unestablished a base now. Now you got the after hours VWAP done caught up and established itself. Then people gonna look for that level to trade off of. So if you go to the 15-minute, what we got right there? Came down, touched the VWAP. This one came down, touched VWAP, and once it broke, you had that pullback down here. So now what you see here is longs are always looking for another level of support. In this scenario, they looking like the way I go through. I look through all my charts. I look through every time frame. I'm looking at everything. I'm looking for anywhere I can find support or resistance at. 15-minute, not so. 15-second, not so much, but 1 minute, not so much either. I mainly do the 5-minute, 15 plus, cause they hold up more. Because a lot of more well-seasoned traders, they like to use higher time frames versus like the degens who just trading because something's moving. They really don't even think to look because it's called the top-down concept where you go daily 4 hour 30 like that. You go top down. They don't even know about that shit. When I was a DJ long, I didn't know about that shit. So you want to get those multi-time frame alignments telling you, painting you a picture of essentially people having the same ideas, because a lot of trading is what I would say a collection of opinions, right? All this price action you see on the chart is just a bunch of people exercising their opinions with their money, right? So if you can find points where these people would like to trade around, that is how you can build a bias and you can build like structure to the chart based on the psychological knowledge that there's somebody who likes to trade there. And if there's enough of them, if enough of them watch that level, because everybody don't trade on the 5 minute, everybody don't trade on the 1 minute, the 15, 30. No, everyone doesn't do it. But that's why indicators work, but you have to be able to decipher the information. It's like if you wanted to Google something, you could Google some shit and you could never find the information because you didn't look for it the right way, or you couldn't sift through all the noise and find the shit that made sense. This is the same way. This is noise to me. A lot of this is respecting to a degree, but it's not as clean as I want it to be. Not in these areas. At points it is, but not in these areas. So I really want to go where I see it's being respected, because that just tells me that on this stock, on this indicator, they like it and they are respecting that indicator. Because there's nothing fucking, you know, when these stocks are falling or pumping, there's really nothing in the fucking world that would tell a stock to stop on a dime at a level. But they do, and they do that shit frequently and all the time. So if you think about it from that perspective, why do they stop there? Because somebody wants it to stop there because they think that's a good spot for it to stop. Up or down, either way. Whether you're short or long, somebody likes that level to stop that stock on. They put their money behind the ideas, and the ideas give you what you see on the chart. So I'm always combing through the charts looking for support. When I was used to be in drawdown, I would call it looking for a savior. I would be looking for something that's going to save me or give me reason to hold a long position into drawdown, etc. So if that was my mentality as a long, you can have the same mentality across 1,000 longs, 10,000 longs, whatever. But if enough of them form the same opinion and same bias based around random fucking numbers and lines on the chart, then you can then take those random numbers and lines and use them to your benefit. So in this scenario, like I said, this was the level, right? We watching the 30-minute. The 30-minute has the cleanest respect for these levels on this whole chart. That is the cleanest respect. And you can see even now, like I said earlier, when this breaks below, it's either going to continue to go down or it's going to want to try to come back up and retest on this same 30-minute candle. And what did it do? What's the top of this candle is 67. That 90 EMA is at 68. One cent off on a $2 and set fucking 68-cent stock. So if you were short, you could have looked and took an entry right here. I mean, it's no volume here, so I wouldn't take an entry here. But you could have, you know, later, early in the day when you had more volume. More volume means you got more eyes, more money being thrown around. So then you got more opinions, and more opinions, if they're acted on, means that those opinions are going to be strong, and they're going to force a nice direction in the stock. Which is why you see shit like this, where it comes down, touches the 90 MA on 2 million shares of volume, and then climbs up for the next so many hours. But you can kind of predict this movement just strictly based on the fact that you know the other guy is looking for something. If you can identify what he's looking for, you can play around it, and you can play off of them. It's like chess. Like, you want to know what their move is, so you can go and think 10 moves ahead and try to counter the move you believe they're going to do before they do it. This is essentially the same thing. And so I keyed it on the 30-minute chart because the 30-minute chart was giving me the cleanest rejections or support levels on the whole chart. I could look at this, it stood out to me very well. I don't have to fucking, like, if I go to the 5-minute, yeah, oh, it's holding below the 9, okay, it's riding down, it's an uptrend, but it's not holding no levels. Like, and I can go to stocks where it'll hold the 5-minute and never drop below these EMAs, right? Whichever one that stock picked to stay above. But you look at this one, it's just sitting there. You know what I mean? It's doing all this noise. It's not really telling me anything. So if I'm alone looking for help because I fucking bought up here, where I'm gonna look to? There's nothing here. So I'm gonna go, okay, let me go to the next chart. Any levels here that I can like real quick? All right, well, if this candle closes above this level right here, I like it. Then I go to the 30-minute. Okay, this candle is showing that it can bounce here. And if I can get this one to hold here, then maybe it can go back up if other people want to step in and buy this up. Or maybe even they step in and buy it up. Who fucking knows? But essentially, it means that they're watching it because they're pushing it to these prices. And that's why you'll see shit like, you'll see people put orders at random spots on the chart. Like, this guy got an order at 58, about order at 58. He picked that spot for a reason. Why did he pick that spot? Well, we on a 15-minute chart. I could easily say he's trying to target after hours lows. What the fuck is after hours lows? Guess what they at? They at 58. They right there. And of course, his order is sitting right there too. What's this order right here? This is around 50. This is 58. This is 55. Somebody else put an order at 55, but that could just be to catch it, to try to give it more strength to the upside. So you got that guy sitting order right there. Now let's go on this. Nobody really has any orders on this one, but somebody has a sell order at 91. I try to find 91 on here. Where would you boy want to put a 91 order at, and why? What are they saying they want to put a 91? Could be this bottom range right here they want to target for a short. I don't know, but the support for our case is what we're looking at. And I'm gonna give you, what's another? Oh, SVCO. Now, how I said that each chart is individual to itself in the way it respects the indicator. Sometimes they got a lot of crossover, and you can apply these to any stock. But for the most part, you have to look at the stock, observe it, see which indicators it likes to respect, and that'll give you an idea of what the traders who trade that stock are watching, and then you can start watching that. So I look at this one. I was trading this one earlier. This looks like noise. This is a bunch of noise. There's nothing really here. I mean, aside from this, which is a daily SMA, it respected pretty well. There's not a lot going on here. It broke the VWAP. It's not really holding up too well to nothing. Like, you can't point to, like, it did something a lot. Like, maybe the holding this 20. It held the 20 pretty good, especially on this big drop right here where there was nothing there but the 20. But that's kind of like a one-off. It's not respecting it over here. Up here, kind of, but it's just not clean enough. So let's go to this chart. This is the one I was watching and using as my case basis for which indicator this particular stock was respecting. Now, this 15-minute chart, every time a candle wick touched this damn thing, it went up or the body held above it. And this is a pretty big move. This was 40 cent, stopped, held. Now this one broke below, but watch what it does. The body of the candle came, dropped below, came back up, held above it. The next thing you see because they teach you this shit as a long trader. This is it's a bottom. What the fuck is it called? It's a hammer candle, or essentially a spinning top. But because this is above 50% of the candle, this is a bullish candle, even though it's red. This price pushed down, came back up, held the level, which was VWAP, and then also something you got to consider too. When you have two levels coincide with each other, it makes that level stronger. Because if somebody doesn't have VWAP, but they have the 9 EMA, they watch the 9 EMA. If somebody don't have 9 EMA but they got VWAP, they're watching VWAP. So when two levels coincide together, that makes a stronger level because it means you have more eyes on that level. Because everybody doesn't use every indicator, but they use some. And if you can have a chart that shows, that's why you have some people, they'll trade something that you don't even know what they're using. They might use a fair value gap, whatever the fuck they're using, and it's the same level that you set on a EMA or a Bollinger Band or whatever. We all trading the same shit. So it's just what they see, what they use. So the more stuff that somebody could possibly see, the more traders you possibly have trading at this level. So then when they held that level, what you see, that's kind of go green. Even though it dropped back below and held it back above. Now, if I was to watch this live, pretty sure this opened up, came back below, went above. Once it closed above, next candle green. What you do, wick up, come back down, respect the level, which was the 200 SMA, respected that level. Then we came back down. Now we've started a trend here where we wouldn't have respected the VWAP. Then once VWAP broke, it was no longer support. 9 EMA became support. Then when they crossed over, 9 EMA became the, I guess you could say, dominant indicator because it's above the VWAP. So it has to fall through the 9 to get to VWAP. So the first level of support is going to be the 9 EMA. And what do you see here? Wicking up close, coming out to the 9 EMA. This one right here opened below. This failed. This was a failed breakout. Opened below, and then this touched down a little bit more. What did it come down to? Low was 60. This EMA was at 56. This candle closed at 66. So this candle came all the way down to 60. That dropped 6 points, and then it came back up. And then what's the next thing you see? Now remember, a level below is support. A level above is resistance. This is a 200 EMA. What do we see happen here? Now, because I already identified the 15-minute chart as the dominant chart that is respecting levels, I'm on this one. Look what it's doing. All these candles are respecting this level to a degree. Wick touch came down, came back up. Wick above came closed below. Wick above closed below. Wick above closed below. Wick above closed above. And when a candle closes above, because close is very important to what they call continuation or confirmation of a trend or of a move. Candle closes above, that's a buy signal. Then you have this one, broke below, came back down. Remember 9 EMA with support, pushed up, went above. Now I got all this shit on here. This is something I drew real time. This was the 5-minute chart. This is a pattern from the 5-minute. Now this is what I was talking about earlier, where you have multiple indicators giving you the same answer. It makes a stronger level. So I'm gonna go to the 5-minute, because this is where I drew it at. Now this is why you can trade on smaller time frames and make money, although bigger time frames, if you had kept holding, you couldn't have. I set this as an ascending wedge, bull flag wedge. The moment it broke below this wedge, and you saw it real time, this dropped from here down to here. And what they like to do when they break a bull flag, or they break above or break below, they like to come back and retest that level again to see what direction it's going to take. And if you got enough buyers who watching it, they step in, they'll push it above. If you don't, it goes sideways to go below. In this case, it broke below, it dropped, because this is the top of the wedge, it dropped from here, this is 510, all the way down to 485, so 25 cents. Then it just kept retesting this line now becomes some sort of resistance level. It's respecting this one right here. And then it just goes sideways. It's just a bunch of noise. But if you go back to the 15-minute where it was respecting everything, what do we see? When the 9 was above, all levels respected the 9. When the 9 got broken, it respected the 20. And it's not respecting these to the T every time, but it's damn near, it's really close. And really close is good enough when you're just trying to take a trade based on indicators and support levels. You don't always have to get, the exact fucking cent. You don't have to get the exact number right. The range is what's important, and the price action is what's important. The same way how if this candle right here had it broke the 20, if it had broke below and held the candle, I mean that candle closed below this 20 right here, this red line, you would have assumed that this stock would have continued lower, whether that was to go up, retest that 20 again, and then push down, or just a straight push down. And if it just straight push down, where's the next level it's going to? Or what was our previous major level of resistance to the top, which you can see the clear indicators of how it respected the level, how it couldn't break, and then when it broke the level, what was the price action when it broke the level? It broke the level and it went right to the next level. You had a strong move to the next level. And this is what I call trading between the levels. Like I would never take a short right here. Even if I had an indicator telling me, like let's say this was the high of day. I'm not taking the high of day trade right here because 200 EMAs and SMAs are more important levels, more stronger levels than the fucking high day. So I'm always gonna give high days lesser, you know, preference than I would give a 200. So I would never trade between this level. And you can see, like, it tried to stop in here multiple times, and it just pushed back up. And this is where you wanted to see the stop action at. Now, I did a bunch of other stuff up here, and that's fine. But essentially, this candle, well, although it pushed, this candle never closed up there. This shit came right back down. I added on this spot right here. When it popped up here, this was an absurd move. I added right around here. And it came all the way down. Dropped 40 points. And it closed. The close is important. It closed below this level. And if I go to other charts, you'll see came down, closed below the level, closed below the level, close. All these closed below the level. This couldn't hold above. They eventually came back down, closed below the level. When I'm looking at these charts, it's all I'm looking for. And see here, it's a lot of chop. It's not enough to give me a picture right here. It's too convoluted with a bunch of shit going on. But when I start to increase the time frames, I start to get a clear picture of what this stock is trying to do. And you got some people who only trade on bigger time frames. That's all they do. And this is how I trade. Now you could even take this principle and flip it long, like every time. And I got a strategy to do this, but because my capital isn't where I need to be, I prefer to risk money, you know, to the short side. I got a big edge on the short side because let's say I had went long on some of this stuff would have stopped me out. If I had the cushion to absorb a loss like this, I would trade this all day. But I don't have the cushion to absorb a loss like this. So even though I got stopped out, you know, let's say you come here and it came back down and retested VWAP. You would assume it's going to keep on going and bounce. But it didn't bounce. But now I got to absorb this loss and stop out. That's a loss off my P&L. Now the next candle, I could say, hey, I'm going to take a trade. You know, it goes back to the next support level. I could take a trade right here. It goes back up. I just made, 40 cent, 50 cent. That's cool. But this right here can happen multiple times. And you say, okay, now you came back above, you above VWAP now. This is support. It came up, held above. Then the next candle broke below and went down to this level. What if I had took this trade looking for a breakout? This strong price action here to push above. Then you give me another buy signal here, and then this would have wicked down and came back up. That's another buy signal to go to the top, and then it wicks me out. And then I went through all this chop for how long is this? I would have been in drawdown for 2 hours and some change, looking for this trade right here. That's why sometimes the longs are a lot more difficult because you could be right, but the time it takes to accumulate enough buying power to make your thesis right can stop you out multiple times. If you don't have the balls, so to speak, to hold, or if you don't have you don't have the account value. My account value can't absorb too many losses like this right now. So I don't want to do that. This is very common with long trading. These scenarios right here. You know what's common with shorts? These long top and tails, off key levels. Easy trade. Those are easy trades. And you know what else? If I short it here and it drop down, you know what's the easy trade to take? Sell into support. Close my position into support. Take the money and run. Close into support. If I'm in a long, long don't always pop like this with these big whips going up and come back down. When they do, it scares buyers. You don't want to see, as a long trader, a candle wick up and come back down. Even if it still holds green, you don't want to see that. So when you do, sometimes you just get scared out the position anyway. That's another stop that you hit that takes profit out your pockets. But this, as a short, this wick right here, I'm thinking about adding up here because this is a strong level. If it wicks up, I'm adding. Like I'm already adding. I'm looking for this to bounce down some more. So when it bounces down here, I'm taking profit, getting out the way, and I look for another spot. I don't have to hold this shit till it drops to zero because it's most likely not dropping to zero. But the mentality behind the short is to get in and get out. The mentality behind the long is to buy and hold. If it goes against you, oh shit, I gotta hold some more. Like I don't want to be holding like that as a short. I'm in and out. I'm taking my profit. I'll catch another move. I'll wait for the next overextension, which would be something like this, where I got the best edge and the profit is high. The potential is high at these levels that this is gonna happen. Crazy moves like this, super extended above the 9, super extended above VWAP, just pop the key level. That's another thing. When something pops the key level, it is common practice for that move to come back and test that level again. That's not gonna always be this dramatic, but to come back down and test that level is very common. So as a short, I got a lot of help based on the fact that I know most times price action is gonna give me a way out. It's gonna go up there and it's gonna come back down to try to retest a level close by. And if that level is close enough that I'm comfortable holding that drawdown, then we'll hold it and we'll be fine. But sometimes they don't come back if you're long. This sometimes they don't come back. You know, you got support down here where it stops, but that don't help you between here and here. You have no help here. There's no support. There's no cavalry coming to save you here. But as a short, most days, most days you got somebody coming to help you. As long as you manage your position right, you got help. Long as the help never comes. When help leaves, it never comes. As a short, what they say in where it's at? What they say in Harry Potter? The sword of Gryffindor will always come to those in need. Being a short is being like being a Gryffindor, and the sword will come to you in your time of need. That knife down will come to you. It don't always come to the longs. They get fucking deaf and they be holding for 6 months talking about I need to average into my position, yada yada yada. Okay, so again, each stock is different. Each stock is gonna respect indicators in their own way. It's up to you to identify that respect for those indicators. And like on this one, I was telling the guy, Denny, I had multiple indicators on multiple time frames all telling me the same thing. And that was that 270 was a key level. First it was 275. But again, when you break support to the downside, longs are always looking for the next level of support. So when you're looking to see where price might bounce or where you might need to average out or where you might want to sell your whole position, you want to look to where they are looking. Where's their support? Now we go back to this 5 minute chart. Now this is what I'm talking about time frames aligning. Now, if you take this was our high. High was 83, right? But the high don't always mean nothing because candle close price action takes precedence most times over wick price action. So if we was to go to the close is right here at 275. This is the close. So after that, we're going to establish that 275 is a key level. So we put a line right there. Now, what helps you out with this and knowing that you set a good level is to see how price responds when that level is presented to it. So we take a look at this 275. This is dropped, right? Came back up. Wick below, failed to pop above. It went above it by 2 cents, failed. The next time it came back up, it hit that level, went up. We can zoom in on this. hit that level, came back down to the level again. Now this is another thing too about support levels. The more you have, the better. As a long trader, you say, okay, I broke above the 5 and the VWAP. I broke above high day close. Now I go up, come back down. I tested high day close, and then it held, so they're gonna buy. That's why you get a strong candle like this. Look at the volume on this. This volume went from 181,000, 181,000, 630,000. All because you had a bunch of people who might not have had 275 on their radar, but they had VWAP, they had 9 EMA. In this scenario, we have 3. And this is just on this time frame. If I go to another time frame, how many more will we have? So this is 3 on the 5 minute. Hell here, it goes up. This 306 is the level I drew on the chart on the daily. Now, my levels are normally pretty good. Take a look at 275. Got a lot of congestion around 275. I wonder why the price stopped there. Look at this big move. Look at this big move down into this zone. Test, 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 drop. This shows you that that's a good level. If I had never saw close of day, because this level was already on my radar before close of day was even a thing. 275 was a really strong level just because of the price action around 275. People are gonna look at this chart and they could point to this level like, hey man, the last time it touched 275, it dropped bad. It went down to 145. So that's a good level. So I sit down, I take that, I go here. So now I got this level right here. So it's a lot of congestion here, but you go right to left. So you're looking for a level. I start on the right side of the chart, which is the most recent time frames, and I go back left to right. So as I come back, I see this whole top end area of consolidation right here. Now I set a level at 306, and a lot of times this is kind of a range, but I set it there because you had a lot of stuff right there. 306, Wicks hitting 306, Wicks hitting 305, this wick hit 308, this wick hit 311. That's where we stopped at 308. Now it's not the exact science, but it's close. It's close enough. We go here. The opening this candle right here. 303. Price pushed above. Went to the 200s. Remember those 200s? Went to the 200s, which at the time was 263 and 250. Went there, hit those, came back down to earth and crashed. So respect it. Respect it. Respect it. Oh shit, I moved my level on accident. 275. Dump. These are key levels for me. Both of these are very strong levels. And you go over here, you can see even more price action that played around this number. These are how I set my levels. This is why my levels be so accurate. Look at this. A lot of price action around these levels. Price action around these levels. Candle wicks that don't close above. Candle closes that close below. Stop on a dime. Candle wicks that come right 2 cents off. Stop on a dime. Respected level. Over here, same thing. All these points. When you have a candle like this is a high volume candle. You look at these candles right here. These are high volume candles. This probably had a reverse split, so these volumes are a lot lower. But look at this. Look how I respected these levels. The last time it hit this level right here, popped. Popped. Held. Broke. Held. Sideways. Sideways is another indicator of a strong level because price could not break below. So all this consolidation just traded in channel of this to this. And you look at this right here. This channel was created back here. The 200 was created over here because it's sloping down. So this 200 was created over here, but this channel was created all the way back over here. Look at all this price action around that level. That channel was created a long time ago. But again, the more indicators you have that line up, the stronger your level is going to be. We got a 200 SMA, 200 EMA. We got a topping level, and this is a range because this is not accurate. It's not an exact science. It's a range. We're looking at the price action around this level. 3 levels coalesced on the daily to make this a key point. So when you're looking at this pop that day, it's at 83 million shares of volume. I'm looking at this. I said, okay, I got 3 levels here. This is a very strong level for me. I'm shorting right here. Ideally, you should put a line in the sand. No matter what, I'm shorting this fucking level. That's what you should do if you want to make money. You gotta be fearless sometimes. I've lost a lot of money because I wasn't fearless, but If you want to make money, you got to take these levels. You got to take the knowledge that you feel like you've gained and you've earned and put it to use and put your money behind it and stand on it. And that's how you're going to make money. If you scared, you're not going to make no money. You're going to watch this. Oftentimes, I call out levels like this that I'm too scared to trade because my money issues or whatever I got going on in life outside of trading that cause me issues with trading. I'll call this level out, might not even take it. And then for the next week, I'll be beating myself up about how I could have had a drop from 362 to $3. Free money. I could have jammed this with a million shares. It wouldn't matter. I could have jammed this with whatever, and this would have been free money. Whatever I chose to throw at this, and this stock could have absorbed, I would have made money off of. Whatever that share number is, I don't know what it would have been, but whatever it was, I would have made money because I trusted the analysis of what I saw. Painted a picture based on what I saw, and I acted on it. Alright, so we can get off this daily right here and go here. It's 4 hours. Sometimes you can find levels on the 4 hour. I very rarely do the 4 hour because most times a stock has price movement. Like all this movement is daily price movement, but sometimes it's not clear on the daily. You can go to the 4 hour and you can find the level. Like prime example, a guy was trading this one earlier. What's the name? What's the name of that stock? Why am I forgetting it? Let me go check. Oh, Click. That's what it was. Click. Okay. And stocks are weird like this because again, it's all about what somebody believes. This level was ass, but somebody believed this level meant something, and that belief led them to trade in a way that said that level meant something. I zoom out of here now. This you can't see it now. Well, you can. I guess you can. All the way back here on this date right here. This was a random spike at I don't know, almost 9:30 a.m. It had no volume, 448 shares of volume. It spiked to 490. You had 200s right there. Spiked to those. It spiked over here to this one on 12,000 volume. Hit that level, stop right. But the key thing is when we were watching this stock, I was saying to myself, 490 is gonna be a level for this stock. And what did it do? Came up to 490, hit it like a fucking brick wall, and closed. This is a 4 hour candle now. Now it might have made different price action. We're gonna go down to lower time frames. That's why you go higher time frame and you start to go down. But I found this level on the 4 hour. And I was like, man, that level means something. I'm not trading it. I couldn't get shares, but I was like, this level means something. I know it does. I'm pretty sure it does. This level means something. Even though this only fucking 400 shares of volume, it's weird that it wicked like this. But because it's weird, it stands out. And if it stands out to me, it stands out to somebody else. And if they watching it, I'm watching it. So we drop this bad boy down to the hour. What do we got? 490, 490, 490. Let's drop it down to 30 minute. 490, 490, 490, 490. 15 minute. Even more. That this is even more presented on a 15 minute. 490, 490, 490, 490, 490, 490, 490. All these candle wicks or candle close opens, respective 490. Drop it down to the 5 minute. What we see? 490, 490, 490, 490, 490, 490, 490, 490, 490. Everything respective 490 on all time frames, almost to a T. Everything was about that 490 level. Let's go down to the 1 minute. 490, 490, 490, 490, 490. Even to this day, right now, it's that 490. So that level meant something. Only because somebody else thought it meant something, their belief became a reality, and their reality showed you on the chart what the price direction of this stock was going to be based on the support and resistance that they identified and they traded based off of. So their opinions, when you get enough of them together, they will make the price move. And if you know what they're looking for, you can play around the price movements that they are looking at. If you look at this too, like if I had showed this at $5, like I said, I couldn't get shares, but if I had showed it at $5, I'm selling every time I get down here because for various reasons I see stuff on this chart. There's levels on here I don't like. All this, not like levels I do like. All this price movement stopping around this zone. Now, again, as long as stock is bullish, it's going to keep trying to retest highs. So if I know I'm looking for a quick scalp, I don't want to fight the highs. I just want a quick scalp. $5, $4.95, whatever. Right here, that's 20 plus cent, whatever. 20. Let's say 20 cent on average. You're gonna get from here. 20 cent. Take my 20 cent and I'm running. And the next time you can do it again. That same range, 490. You can short it here, come back down, do it again, 20 cent. Now this was a bigger move. You want to short bigger moves, the volatile moves. I don't want to short these. It's too. It's not nothing going on. This had high volume that came in and went up based on the relative to the stock. It was high volume increase from this point here where it pumped back up. I wouldn't trade none of this shit over here. It's just not nothing going on. Like this was a move, but there's no volume to like. There's volume, but there's no selling volume. It's just coming up here and stopping. And it's late in the day. How much more movement you gonna have? This is like 7:30. Everybody going to sleep. It's Friday. Like all those things are indicators also. Time is an indicator. Place is an indicator. Day is an indicator. All this shit paints you a picture. It's all indicators. So I'm using all that to say this is not a good spot. Even though if it was over here, I would take that same trade possibly. And I even said in the group chat, click is close to dying. And it was. It came down to fucking 460. You know what it did? Went right back up. And why did it go back up? We go back to the whole level thing. What is the levels? 460, 460, 460, 460. All this price action that revolved around this level, 460, 460. And you also have added benefit that VWAP is here. VWAP came close up to this level and gave it more support. Because if you like one level, you like another level. So if I like 460 as a long trader, I'm willing to take a buy off of 460, knowing that my next level of support is only 456. That's my stop. If it breaks 456, I'm risking 5 cent, let's say 5 to 10 cent, depending on how fast it drops, to make it to the highs. So 46 from 460 to $5 is 40 cent. From 460 to 455 is fucking 5 cent. If you want to say 550, that's 10 cent. I'm risking 10 cent to make 40 cent. That's how they think. That's what they're looking for. That's how they're trained. If they know what they're doing. But the ones that know what they're doing are oftentimes the ones who move the price because they put their money where their mouth is, and they put their money at these levels. They hit the buy button when it comes to these levels. The deep random degens in the chat, they add liquidity, but most oftentimes they're retarded. So they either copy trading or they just trading based on feel, and they're not looking at none of this, and that's why they lose on the long run because they don't know what the fuck they're doing. So this was a really good trade. Let's go to a 5 minute time frame here. The 5 minute time frame paints us another picture. It just backs up the picture that we had. Now, ideally you go from top down, high time frame down. In that case, that was on the 1 minute, so I talked about the 1 minute. But Wick 460, Wick 460, Wick 460. When it came over here, it rejected, open, push, pull back down, held. Now this is the key. Candle close above or below a level. Essentially, is confirmation of that level's break. When it closed above, it broke, came down, retested again, went above. Then you went up into that 490 range. Look what we see. It's 5 minute, 490, 490, 490, 490. Now remember, candle closes take precedence over wicks. This candle closed 488, 88, 88, 87, 89, 92, 92, 89, 88, 89. So all this is all within the realm of 490. This is that level. This is another time frame confirming that level for you, based on the price action that came from that level. Same thing. Now look again. We're on the 15-minute chart. 460, 460, 460. I think we already did this one at the high levels. 460, 460, 460. With all these points on the graph telling you, painting you a picture. 460, 460. Price break below, came back above, held 460. Open, test, came back up. Next candle went up, 460. All this shit revolved around price action based on a 460 level. Let me see what other runners we had today. Because I forgot. One day. ELPW. Now this one was a tough one, but it can still be traded. It was a tough one. Sometimes these charts like this have been beaten down so much they don't have a lot of levels. So if I were to look at this on the daily, I'm not gonna see much. That's why you do top down analysis because I can't see nothing. This stock is at $36 right here. 24, 13. Like I don't see shit here. There's no picture being painted for me. There's a gap. The gap's at $12. That stock ain't getting a fucking $12. Not most likely. It's not EMA. What we got here? What this 9 is? 760. So remember 760 because everything counts. Do we see 760 here? Yeah, let's go to the other chart. See what it hit. Hope the 5 minute. We didn't get 760 this day. Or that day. Or that day. Or that day. So 760 don't count. We don't see any response to that 760 level on any of these charts anyway. At least not in the days that it was trending. This it's just doing what it wants. So we're not gonna count the 460. But we come here, 15 minute. You got some respect for these levels. It's still super choppy. It's stopping, but it's not enough that you can paint a picture. And that's because this shit is low liquidity, um, low volume, spreads are all over the place. You can look at this one. The 200 on the 30. It held it pretty well. But this chart isn't clean enough for me to watch. It's not enough. Let's go to the hourly. I like the hourly. Now see, I like a chart like this because it's clear. If I was to draw a line right here. Oh no, I'm not buying shit. What are you talking about? I have to draw a line right here. Respect, 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 respect. So once I see all this pre-market in the day before, even at the hours yesterday, I could trade based off of this. Now I could be wrong, but this level is at what's this level? Open is at 546. It popped to 640. Could have got cooked on this one if I took a trade based on this, a short. But I wouldn't take a short based on that because this is a big ass green candle. So context in conjunction with indicators and levels. Well, levels are indicator, but context in conjunction with an indicator will keep you out of trouble. If I had looked at this and be like, all right, well, I'm picking the hourly as my chart that I like the most, I can find levels off of. I feel like I see this. I don't like this shit, but guess what I do like? I like it over here. I like this retest after this level got confirmed yesterday. This level got confirmed this morning, and then this level came back up and retested after market open. I like this level just because I saw it respected twice, more than twice, but I saw it respected previously to a high degree. That leads me to believe I can think that it will respect it again to a high degree. And what does it do? Respect it. Respect it. You could have made money at each one of these points. This opened here, jumped to 550, went all the way down to 466. Ended up closing at 470 something. I don't know, 478. That's where it closed at. So if I took a short off this level, that's a short from 550 down to 478. This is a money short. This is a really good setup. I didn't take this because I couldn't trade this, but I would have loved to have traded this stock earlier. And you do it again. You just wait. This was a good play. These are the plays you're looking for. Crazy price action to a level that you know has been respected before in the past. And I'm gonna drop this down a little bit because the chart was so zoomed out I couldn't see it that clearly. This looks really good. All the bodies and wicks are touching that, and even over here, all this price action. But the most recent price action is what we're looking for because all these new buyers and sellers came in. They set the new levels. Old levels count when you don't have any recent levels. So they set the levels, and the reason why we look at levels a lot of times is because the price action is so new and recent. A stock might have been going sideways for months and just pops. So you gotta go back and find levels on the daily a lot of times. This stock been popping, last couple weeks. It looks like 4 hours, 1 hour. This stock been making some moves, some volatile price action. So these levels were getting set as it did this, but the levels we looking at is the most recent ones because a lot of these don't bother us. Now if I look at this and I say I like this level, I can get some, I can feel like I got help from over here also. But there's so much going on after this. So much going on here. So much going on here. Once you get to this point, that's why I picked this one and I counted it as a level. Because once I got to this point, you saw a clear direction off of the level. This one, it came up, you had direction, but you didn't have like these huge like movements off this level. This was a really big move. This was kind of a big move, but this was also a big move. I'm not gonna lie. But this is just like a break of structure. I don't think this level was set back here. It's just because some traders trade based on structure. When this candle broke below the low of this structure, it created a sell-off because that was a confirmation of a downtrend from breaking that structure. Came back up, retested that structure. So this level helps because of that over there. But I'm really looking at the most recent levels because these are the buyers and sellers we're attacking right here. These are the guys. These are the bag holders. These are the shorts who looking to take advantage of the bag holders, and I'm trying to help them. So these are the levels we're watching. Most recent levels in this case. And you can see all day. You look at the hourly. This looks clean. I can look at this and paint a clear picture. I don't got to search for nothing. In the 5 minute, it's all this shit going on. I got all these indicators on my screen. But if you didn't, this would look like a bunch of chop to most people. Now I had strategies trading around some of this stuff that it's doing here, and I would use those in conjunction with what I saw in the high time frame to paint me a picture. I got some Bollinger Band strategies that work really well that I like to use in a situation like this. And like I said, I really like this stock to trade it. I just couldn't trade it. But this was money. This to me was money. Like I saw these and I was just crying I couldn't trade it. This was money. So I take these indicators and you can see like I can go in any stock and you can find levels. Ooh, let's do this one. It's EDHL. This is another stock I couldn't trade. But this was a pretty wild stock. But this was last night. No, this was this morning. This morning, yeah, this was a wild stock. I could not trade this. I thought I missed the move, and then when I tried to catch the move, it said I couldn't trade it. It wasn't tradable. But I called this out earlier this morning around this level right here. This is a wild fucking move. This is a wild move. Now this stock has a really low float, 540,000 shares, 2 million market cap. This is a very small stock, and those can run. But this price action was crazy. If you look at this on the 1 minute, it was crazy this morning. And stuff like this is an anomaly. This is like why shorting has such a huge edge in trading because you see this price action. You see it go from this to this in 6 minutes. So it opened from here, opened up here, whatever, did all this shit. 1, 2, 3, 4, 5, 6, 7 minutes to do this. To jump $3 almost, $2.50. Crazy price action. And then when I saw this spike live, this spike was really quick and really big. It really drew my attention to it because of how quick it moved. Sometimes those little fuckers can keep on moving quick like that and you'll hate your life. But in this case, I would have loved to short this. Now this is a 15-second chart. In 15 seconds, it went from 6 to 722 in 15 seconds. That was a really quick move. And in a minute, it went from $5 to 722. So for 15-second candles, it did this. Went $2.20. Crazy move. So I wanted to short that. I couldn't get into it. I couldn't short it. But let's zoom in on the daily on what it's telling you right here. Not the daily, but the rest of this chart. I don't know if this one's going to be a good example for the top-down strategy as far as looking at the levels top-down. Because I'm not seeing any, like you look at this There's nothing here. Like, it's not a lot. Broke above, held, retested, came down, broke above, held, broke below, held, came all the way down here, held, came back up. What the fuck would tell me it's gonna hold down here? I don't know why I would hold in this random spot. And there's low liquidity, so that shit could have just dropped there really quickly, and you would have never really knew what happened. You just would have been sitting there either stopped out or in drawdown trying to figure out life. And then it reclaimed, came back up. Like, that's all fine and dandy, but these are not strong buy indicators to me, especially on the hour chart. This is a lot of drawdown you could be sitting in there, buddy. You look at this. Where we at? This was some more 15-minute chart. If you traded, you was long here. You was in a lot of drawdown, buddy. This was a perfect short, but if I had went long around here for some type of bounce, who fucking knows? Like, bro, I could have been in drawdown for an hour. I don't want to be drawdown for an hour or 2 hours because it didn't come back up until after a 1 hour period. So you draw down here, 1, 2, 3, 4. That's an hour. 15. I went 30 minutes before you came back up to break even if you bought for some type of breakout pattern up here. Based on another chart. This chart wouldn't give you a buy signal here. But there is probably a chart that did give you a buy signal there and you would have got cooked. Which probably could have been this one. Some people like trading in consolidation looking for a pop. It obviously didn't pop. But look at this volume. This volume was so ass. It was so bad. But anyway, I want to trade that. This is another one. This is POYX. Did I have levels on this one? Was I watching this one? I don't know if I watched this one earlier. I know people traded it, but I don't know if I watched it personally. I don't think I did. But looking at it now, 15 minute, nothing real clear. I like 30 minute. I do like 30 minute. I do like the 30 minute a lot. Now the 30 minute and the hour paints me a clear picture to me. Let me see if there's anything else in here or any other time frames. 5 minute has some stuff I like. I'm liking some respect is showing to these levels up in here, especially the break and holds. Like when they break above, nice candle, came back down, retest, broke above, held. When it came back down here, all these EMAs, 9, 20, VWAP are all close together. So when it respects one, it respects the other in a sense because they're so close. So it came down, touch VWAP, respected VWAP, went below, held, when it went above, broke above, came back down, went up. So this is good respect right here. I like this. It showed me that it's respecting the level. So if I was watching this for a trade to the long side, I would say okay, it respected the levels here, 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 and when it broke above, it respected it again. Now, a strong move is always an indicator of a good level. It broke above, strong move up. This is a 30 something cent move. I like that. When it come back down and retest it again, I could have took a long off of this. This is a good long. Because what's my risk? It's gonna break this level and go down. Okay, well how much? I can add a risk value onto this. And in this case, it only broke it by 2 cents. Let's say I put a 10-cent risk on this. Because top of this candle, bottom of these candles is at 582. VWAP's at 91. Okay, I add 10-cent risk to this position. I go long here. Motherfucker goes to the moon. Goes to the moon. Now, this is a level I drew for a guy who was trading this stock, and I was telling him that you would look at. He asked me what this was. I said it's a bull flag. He just this picture right here, just this. He sent me this. I said it's a bull flag. So I drew this out for him. And at the time, we only had this red candle here. Now, this is another time where you have to use indicators intuitively. They're not one size fit all. If it respects it, it makes sense. If it don't respect it, don't try to make it make sense. In this case, the 5-minute chart was showing a lot of respect for levels, right? I've already identified that we got respect here, 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 various different times. The 5-minute was clearly being watched by somebody. All right, now I'm keying on this. So they sent me this. Okay, let me look at it. I looked at it. That's okay. I like the 5-minute chart for price direction. and indicators. I'm gonna set it up. So I set this up, this wedge here, bop bop. At the time, you had this red candle only. So all this came after. So what I told him in the chat was, you're gonna look for a break above, outside the bull flag pattern, or break below. But if it breaks above, oftentimes it likes to come back down and retest. So what do we do? Broke above, set a new, almost a new daily high. Well, it was a daily high by 10 cents. That's another thing too. These two indicators, 709, 707. 707 was a high day at the time. 707 sets a level. That's an indicator. So when I come back up, if I'm long here, I want to get out if it shows weakness at 707. So I would have sold at 705 the moment this shit stopped and slowed down, didn't pop. Because you want to see follow through. You want to see a stock push, ideally stutter at a level and keep on pushing. Um, or, not so ideal, but probably stronger move would be push, retest, push again. Those are really strong moves. Um, because if it just keeps pushing, it has to pull back at some point, and you don't want to buy too high on that pullback. If I got in here for the breakout, I'm good. If I bought here for a breakout, I'm fucked. So I'm not buying here. I'm only selling here if I was long. So now I sit there and say, okay, 707 is here. If I'm short, if I want to be a short here, it broke out the level, right? This is a bull flag. What does it want to do? Oh shit, plug my headphones in. They need to charge. Alright, this is a bull flag. How do bull flags behave? They like to do breakouts and retests on the bull flag. So broke out here, looking for a short. I could short based on two things. One is slow down. Two, this is the top of this candle. And it's a breakout from the bull flag. So I got a level here it got a chance to stop at. I got a recent breakout that is going to look for a pullback more often than not. So I take a short here. Then come back down, you retest. Now, the breakout was when it broke above this ascending line. Now, this shit is not perfect, but it was close enough, right? The price action told you that whatever I drew was real because it responded to it. Broke above, so you had two things coalescing here: a break above these candles here, and a break above this descending resistance, which was the top of the bull flag. Broke above, huge price action, goes up, stutters, comes down. Now, when it comes down, what I'm looking for is a retest of this level again. So these two levels that came into play on the way up, they come into play on the way down. So retest the level again. Okay, it holds. Wicks down, comes up, holds that level. Now, if this was a smaller body red candle, or if this red candle body stopped up here, that would be a buy signal and as a short, an exit, because it showed a lot of strength, tested that level, showed strength, price got pushed back up, buyers push price up. But because it didn't, this is a very big candle in comparison to the green candle before it. But there's gonna be some longs who think that's strength because the hell is still candle close takes precedence over a lot of things. Candle closed above that line. You had longs who liked it. Guess what? It opened up and it jumped up and tried to retest these highs. Then we got back to these highs again. Now we have three levels. We got the high set here, the high set here, and the candle body closed high that is set right here. And it retested that level. And in my mind, this will be retesting three separate levels. Even though they're so close together, each one of these levels has a different like set of people watching it for their own indicators and what they want to see. And they could be watching all of them. But some people don't look at this, some people look at this only. So you know that there's three different types of things that can draw eyes from three different types of people. So I like that. More indicators, the better to confirm a level. So come back up, retest, pull down. Now once you see a pull down, you see two things happen here. We had a retest and a fail. But this is what we call a wick reclaim. So this candle popped up. The wick reclaimed the whole thing. Now what it does is, remember, candle close hold precedence over a lot of things. The bottom of this candle is the candle close. Bottom of that candle price is 693. You already got this candle opened up 692. This is the same essentially, but opened up top of that wedge. Push, couldn't break. When that candle flipped red, That's a sell indicator as a short and as a long. If you know what you're looking at, that should strike fear in your heart to see some shit like this. Now, what end up happening? This performed textbook setup how you want to see it. Now, whenever you have a strong move, and generally speaking, these are more presented in long setups than short setups because it's easier to scare long out of his position than it is to scare short out of his. Shorts know they can average up. Most stocks fall. They'll look to keep adding sometimes. I even add sometimes. People I know who trade they add. So strong moves up have higher probability of really strong moves down when the move is over. So you had all this shit right here to happen. So that means that conversely, inversely, you're gonna have a strong move this way if you get the move started. Now all this move got started by the indicators we talked up here, the price action with this candle come down, close, couldn't break above. This one opened up, came back down, flipped red. Now a 5 minute candle flipping red is to me one of the strongest indicators on a 5 minute chart of the price's direction. If I'm using that 5 minute chart, and this is what I mainly use 5 minute for my entries and exits, 1 minute, 5 minute. That is one of the strongest symbols I've seen because it shows weak price action and overtaken by selling action, strong selling action. Flip this whole thing red. Now this flip dumped this stock 30 cents. Now, if this was Tesla, that wouldn't be a lot. But because this stock is only $6, that's a lot. 30 cents is a lot. That's 5% dump. If Tesla dumped 5% in one day or one candle, it would be the talk of the town for weeks. All right. So they dumped 5% in one candle. So I like this. Now, I talked about this earlier. Longs look for support anywhere they can find it. Now we've already established that the 5 minute chart is a good chart to establish support levels based on the price action around those levels. What do we have here? Now if I watch this live, I'm pretty sure this started around this EMA. Strong break from these indicators up here caused the downfall to the next support level. This support level failed, fell down. What happens? This one came up here. Now I don't know exactly how this happened, but if I had to guess, it held here, came back up, retested that 9 EMA because remember, support turns to resistance when you pass it and go to the other side with the candle body closed on that side. Now it became resistance. So now it came up, wicked up, boom, flipped. Another candle probably flipped red. I would have to look on in 1 minute, but it's probably flipped red. Now what's it going to do? Flip red, come back down to the next level of support. The 20 EMA. People, they always looking for support. Levels, levels, levels. They always looking for a level to save their ass from getting cooked and holding this damn stock for 6 months to a year. Right? So, came back down, wick below, but the candle closes what matters. It came back up, closed above. Right? That is a clear indicator it has respected this level for support. It's established a new base for its support, which is this 20 EMA. The 9 is no longer support. 20 is the man now. He is the man. Now, next candle, what it do? Open. Probably wick down a little bit. Opened up, came back up. Bullish engulfing. Covered the whole red candle here. Wicked above the 9. Now, remember, 9 no longer support, but the 9 has become resistance. Wicked above. Could not close above that candle. If this had closed above, you would have seen a lot of price action. You would have seen price try to pull to this level right here, which was the last time you had a big move around a number that caused like this. The bottom of this candle, which was 693, that was impartial. That was partial cause for this big drop. So when we come back up, we're gonna look to retest what caused the drop the last time. What caused the strong movement the last time? This 693 had a big part in that. It would have come back up and tried to retest this level. And then if it broke above, you would see a strong push. Retest the next level that caused you issues. 607, 707, whatever. These level right here. But we didn't get that because you didn't get the ball rolling and buyers didn't step in. They sold it right there. You couldn't get above. Next candle opens. Baby wicks above, close below. What does it go to? The support we already established. Next candle opens, wicks up. There's a bunch of chop there. Breaks below, closes below. Close below. Opens here, wicks up, wicks up. Can't close up there, close below. Close below. Wicks up, close below. If at any point this had broke above one of these levels, then you start to get the bounce where it tries to turn itself around and go up. But no, what does it do? It just lets the EMAs walk them down. The EMAs just walk them down the whole way, all the way up until you got to nighttime, and it just went sideways. EMA just walked them down. Now all this shit over here is chop. It's irrelevant. This was the real price action that you would have traded, and this all was started from this bull flag. This was the straw that broke the camel's back when it couldn't. This price action couldn't continue based on this. This started it all. This is like rolling a snowball down the mountain and causing an avalanche. It just accumulated snow as it went till it became a big ass ball and it made a bunch of snowfall. Another example: levels, levels, levels. But these levels might not work. Like I'm on a 5 minute chart this time. If I go to 15 minute, I might not see nothing on the 15 minute. 15 minute might not be that clear to me. Is it respecting it? Kinda, but it's not respecting it to a degree that I would say, oh, yo, this is good. Now, when you're looking for dip trades, if I was a long, you're looking for dip trades. I always have multiple charts up at one time, so I'm watching all this price action live on multiple tickers. So I'm seeing this real time. But I could look to take a dip here based on two things. I can take a dip trade here based on two things. The level that this chart, this 15-minute chart set, they set the level. I didn't set shit. They set it. They set it here. I could have took a dip trade doing that. I got a level here, which I would have drew a line, and I got this EMA lining up with that level. That gives me two levels of support. Set this level, and then I take a trade off this level, and I would have made some money, but that's a more risky trade, more high level trade. But that is what the thesis would have been to trade it because it set a level here, and I had an EMA, which I know it likes to respect. Stocks like to fall to the next level it can find. That would have been the next level to find. Down here is no man's land, not really, but this is the level. Between here and here, there's nothing. Once it gets to here, you got buyers who can be like, yo, I like that level. So you can take a trade off that level, and you oftentimes will see, those random orders on the chart, just sitting at that level, just waiting. And they're not random because that person is looking at something, and they probably looking over here. So that's 15 minutes. Go to 30 minutes. 30 minutes good. I like 30 minutes. Now this would have been again. You got multiple levels up at one time. This was at 3:30. With 13:30, it's 1:30. This was at 1:15. This is what you call multi-time frame alignment. So the 15 minutes showed me levels of support. And look at this right here. Level, level, level. This is a good level because price action has dictated that this was a spot. Now we already knew that from the 15 minute, but what if we had started on the 30 and worked our way down? We would have knew before we went to the 15 minute. This is a good level to watch. And in turn, at the 9 coming up, this is another good level to watch. So the 9 on this was 552. You go to the 15 minute, 549. Right there. Look at the bottom of these candles. 555, 555, wick 555, 557, 547, all within that same range. So you would use that as support for your push higher if you was long. Or if you was short here, I'm getting out down here. I might scale out in this area, but again, it just depends on what time frame I was initially watching for the entry, and then I would which one showed me the best information. Like this was here 638. That was at 12:15. I go back to 12:15. What was it telling me over here? This is 12:15. So I topped out here. I shorted it. As I'm watching this, I'm getting all this. It never came back up reclaimed. I'm still holding. Came over here. Held VWAP. Still holding. Then the next candles opened up below. I'm still holding. I probably start to sell down here. But again, that would be coinciding with the other chart. So this is at 12:30 again. If I go to 12:30, I look at this again. I would have saw this bottom wick on here. I would have saw the 20 EMA on from my 5 minute chart because I'm looking for what they looking for. I'm selling right here just because that's a good level for somebody to want to buy. So if I'm short, it's a good level for me to want to leave. Again, back on the 30-minute chart, good level to leave. Go to the hour, 12:30. Not really so much here, but you did have the bottom of this candle close for the bottom of this big green candle right here. Another good indicator. I wouldn't really pay this too much mind because it's not telling me too much, but 30, 15, 5 is all telling me a good picture. Paint me a good picture. And that's enough for me to make a decision based on that, attach a probability to it, and act on it. But you can go to all these stacks. Somebody traded a stack earlier. I didn't look at it because I was locked into another trade. But I did set a level on it. I forgot why I set that. What's up there? Oh, I set that based on this. Based on the top of that wick, top of that candle close. That's why I set that level. Remember, when you're doing levels, right to left. So I looked here, 102, 200 EMA. I'm still stepping up to the next levels. Over here, 113, 113. These are wicks. They don't count. Candle body close, people come first. Candle body close, set it. The wick backed it up. These two wicks also backed it up. Candle body close below the level, backed it up. So I set that as the level. And we go to the 5 minute. You see what the price did. Price with the 109. It's not an exact science. Close enough is good enough under most circumstances. Came up. I could have took a trade there. You know, I could have scaled in into watching. Maybe I probably normally what I do, I scale in close to the level because you're never going to really get the exact number, and a lot of times you'll be off by 2 cent, 1 cent when you try to. So I scale up to it and have definite ads at that top level depending on how fast the stock moves up there. Like if it goes slow, I don't want to add. If it goes fast, I want to add. Unless it goes too fast and blows through it, I don't want to add. So this one, 5 minute, looked good to me. But this was a more of a smaller move. It didn't have a lot of room to set a lot of different levels. But that 113 was what I would have been watching for this entry. Would you look at that? Remember that 102? This is 102. So I respect that 102. That's a good level. Respect the 113. Good level. I mean, there's no need to look at higher charts. You didn't have a long enough move to even establish any patterns of support or resistance on the longer time frame for this one. So it wouldn't matter. Once I saw that daily, that's an entry all day on a stock like this. It's cheap. Most time they pop up and they just shoot right down. They don't hold. Let's see what else moved today. Today was pretty rough. It wasn't a whole lot today. But yesterday, oh my god. Yesterday they were cooking. Where? Oh, but you know what? They were after hours and pre-market yesterday, so it's not really giving me the damn. I can't find those ones from yesterday. I gotta go back in the chat and look and see what I called out. Alright, I'm tired. That's the end of this video. My kids need help. I'm out. My daughter making all this damn noise behind me. Clickety clank, clickety clank, clickety clickety clank. Money goes into her piggy bank.